Well, there are a couple of themes that are keeping the commodity prices volatile right now. One is the U.S. Fed officials using the word tapering a couple of times in the last 1 week. And the other is China talking about controlling the manipulation or the high volatility that we have seen in commodity prices. So while we have seen some profit taking in metals, in agriculture commodities, but one area that has continued to emerge firm in all of this has been the precious metal prices, with gold and silver both trading at around 5-month highs, and the expectation that with the inflation concerns and finally some physical buying and central bank buying that we are seeing, you perhaps are going to look at higher prices from here on as well. Joining us now is Peter McGuire to talk further about that. Peter, hi, good to have you. Gold, $1,900 per ounce has been a stiff psychological resistance for some time now. We've not only breached that in the New York session yesterday, but we are trading firmly higher on that in Asia and now in Europe as well. What is your sense? What are the fundamentals you're watching?
Well, good afternoon, Manisha. A couple of things. First off, you're at 1910, so I agree with you. That big push up, we're at up about $152, $153 in the last month. Where does it go from here? There could be a little bit of profit taking, but I think the overall momentum is certainly going to be up from here. We're worried, as you mentioned, taper. Inflation, Manisha, is a great concern. Higher energy costs, higher base metals, higher stud lumber, higher foods, you name it. Everything in Australia seems to be going to record highs. And not only that, iron ore prices and real estate. So no one can say that inflation's under control. I think it's certainly something that all central bankers would be looking at and biting their fingers nearly to the bone. So, yeah, further upside from here, Manisha.
And then, of course, it is about the US dollar, which continues at 4-week lows, and the real interest rates also on the weaker side. How are you looking at all of this supporting gold? And as you said, there is much highs from here. So what that you're working with in sense of numbers for gold prices?
Well, I think it's got the, why can't it be a 2,000 trade, in the next matter of a month or two? I think that continued upside, unless something happens dramatically, that easing back as far as taper and the realisation is, where inflation plays. If it doesn't get to 2,000 by the end of June, Manisha, I don't think it's going to be far off. And then certainly by the end of the year, you throw your hands up in the air. Have a look at crypto. Where does the equities play? Is there any further geopolitical shocks? What's the unknown unknowns that come to represent to the market? Everywhere you turn, there seems to be a minefield of major news items that are colliding. Israel hasn't been put away. The situation with Iran, Hamas. You've got election queries in the United States as far as Arizona and other states saying what's going on there with vote count. So, yeah, I think it's going to be a very interesting summer, Manisha.
True that, fairly. How are you looking at the silver prices also? Because we are trading above $28 onto this one. Yeah. We've seen nearly 80% of gains in silver prices in the last 1 year. And from here, what is your sense on where are we headed?
I think silver's got more upside. Little brother's going to be carried by big brother, but I think it'll be the best one to look at. It's been, as you know, a big move to the upside, and I think that will continue. A $30 handle is very achievable. You've got COMEX sitting at about $28.20 at the moment. So, yeah, I think every chance you could snap a $30 an ounce for silver very quickly. A lot of the hedge funds, the guys I talk to and the ETF traders, they're all over silver. They absolutely love it. So maybe that's going to be the silent warrior moving forward. The smart money could really be attracted to silver. And then you're looking at what happens as far as short squeezes and all of those sort of things as well, Manisha.
Well, absolutely. But what is your sense, Peter, when you hear these statements from China? I'm assuming that is not going to deter the run-up in physical markets or rather the precious metals here. And the U.S. Fed tapering, we heard it the first time in the April meeting minutes. And now overnight, last night, we've seen more Fed officials talk about that. Between the two of these, how are you juggling the precious metal scenario?
We've been watching that very closely as far as what the situation is, Manisha, with the concerns as far as taper. And that taper talk is, we're right across that. You live and breathe by these announcements and policy statements and just, general commentary coming out of the Fed. So there's the first part. The second part is, the China situation, everyone's mindful of it. The big move up, and maybe, I don't know where we go as far as copper prices, base metals. They've all had a big move. Maybe it's just a time of a little bit of a correction to the downside. But I think the smart money is going to be hitting pretty much up on that precious metal side more than anything, Manisha.
You mentioned about metals, and while we have seen some profit taking, but the fact remains that as economies reopen and as we see the demand continue to come in, would you say that this near-term correction or this lull is over? And I'm not even talking ferrous metals, because yes, they have seen a very sharp correction, more than what the base metals have done. So when we talk about metals like copper, nickel, aluminum, zinc, where do you see these headed?
Well, Manisha, we've had a bit of a pullback, and I'm sure that, you know, it was exhausted to the upside as far as that big trade and that big rally that we saw in April and May. A lot of that hot air has come out of the market, you know, that was absolutely at fever pitch, where we're nearly approaching $5 or 500 cents for a pound of copper. So at the moment, I think there's just a little bit of a consolidation, but I'm certainly thinking that, you know, there's a lot of good times ahead for miners, and prices are going to be stronger for longer from here. 2020, this whole decade is going to be, I think, a very strong time for commodities, Manisha. The storyline remains the same. The last couple of years were a little hemorrhaged. We lived through COVID and now rebuilding the world.
All right, commodity prices stronger for longer, and precious metals and base metals is where you could perhaps see further gains coming in. Peter, thank you so much for joining us. Nigel, back to you.
Well, thanks.